Hello everyone. We will discuss about the Business Economics RTP Jan 2026. First question. Which of the following refers to the study of economic behavior of individual decision-making units such as individual consumers, individual decision-making units such as individual consumers, resource owners, business firms in a free enterprise system. So obviously this is talking about a particular business unit, hence it has to be microeconomics. Which of the following refers to the study of total or aggregate level of output, income? So here the key term is aggregate level of output. So it's studying economy as a whole with respect to income, employment, consumption, investment, prices of the economy viewed as a whole. So obviously this has to be a macroeconomics. So microeconomics study particular economic unit in detail, whereas a macroeconomic studies economy as a whole. Next question, very important question. You can expect this type of questions in the exam. Implicit cost is equal to, they have given various options. So first of all, we'll understand what is this explicit cost and implicit cost. See, please understand that in accountancy, cost means only explicit cost, whereas in economics, cost means both explicit cost and implicit cost. So accounting profit is equal to sales minus explicit cost. So in order to arrive at the accounting profit, you can just take the sales revenue minus explicit cost. Whereas in case of economic profit, we have to deduct the explicit cost plus implicit cost. So implicit cost, which is something which doesn't involve cash outlay. So in economics, we include such kind of cost also as a cost. So that is the only difference between the accounting profit and the economic profit. Or in simple language, accounting profit considers only the explicit cost, whereas the economic profit considers both explicit cost and implicit cost. Please keep that in the mind. Here implicit cost equals to what they are asking. So implicit cost is equal to business profit minus economic profit. If I take the business profit minus economic profit, the difference between these two is implicit cost, correct? So this is only the option. So the option A. Question number 4. If demand curve of a firm's output is perfectly elastic. So in the chapter number 2, we know that there are 5 measures of elasticity: perfectly elastic, perfectly inelastic, relatively inelastic, and unitarily elastic. Here they're talking about perfectly elastic demand curve. Then the firm is, which of these firms experiences this perfectly elastic demand curve? Monopolist, the options given: monopolist, perfectly competitive, and oligopolist, monopolistically competitive. So here um, uh, um, the answer is perfectly competitive, because the demand curve of a perfectly competitive firm, okay, is a perfectly elastic. See here. So that means to say that conceptually, what do you mean by perfectly elastic? Perfectly elastic, we mean that um, a small change in the price leads to infinite change in the demand. That is known as perfectly elastic. So in case of the perfectly competitive firm, what happens is a large number of buyers and large number of sellers. So it deals with the homogeneous product, and each one of these participants are the price takers. Whatever the market price determined by the market force of demand and supply, each individual participant has to follow that. So there is no scope for fixing or adding some kind of, what you say, differentiated products here. It deals with the homogeneous product. Then it is a perfectly elastic. So it's a feature of perfectly competitive market. Question number 5. Firms in an industry that produces differentiated products. Fine. See, please understand one basic thing. Perfectly competitive market produces only homogeneous product, not the differentiated product. Straight away you can exclude these options. This cannot be the answer. PD cannot be the answer. and one firm one market structure that produces differentiated products. The differentiated product feature more resonate always with the monopolistically competitive market. The monopolistically competitive markets are known for producing differentiated products and also incurring huge amount of selling, distribution, advertisement cost. So we can, and also oligopolists they do produce differentiated products, homogeneous products, both. So I'll go by option number C. Next question. Type of industry organization that is characterized by recognized interdependence. There is a recognized interdependence and non-price competition. Non-price competition means competition with respect to producing quality products, not related to the price. So if you read the institute material, they have written strategic interdependence and non-price competition as a feature under the oligopoly structure of the market. You can go by C. Question number 6. Which of these following short-run costs declines continuously? So I want to explain this with the help of notes. See, you can clearly see here the different cost curves here. So marginal cost is going up, average total cost is U shape, average variable cost also first it is decline and then increasing, whereas average fixed cost curve is constantly coming down as and when the output is increasing. So that is what they're asking. Which of the following short-run cost curves declines continuously? So obviously you know the answer, which is nothing but average fixed cost. Question number 7. The restaurant industry has a market structure that comes closest to. So we know that we have 5 different market structure: monopoly, oligo, monopolistic, perfect competition, and monopolistic competition. Okay. See, here mono means single seller, mono means one, poly means seller. So monopoly means one seller, many buyers. That is known as a monopoly. So here restaurant, there are many restaurants. There cannot be a single restaurant. So you cannot exclude this. Whereas in case of perfect competition, what happens? There will be huge number of sellers and huge number of buyers, free entry, free exit. All these things are the features of competition. Of course, there are restaurants, but not in a very huge way. So agriculture is an example for the perfect competition. You can even exclude that as well. Oligopoly means like a very few sellers, like around 10 or 10 to 15, something like that. So, and so restaurants are not just restricted to those numbers. You can exclude that. So obviously, I can go by the monopolistic competition. Monopolistic competition, there is a large number of sellers who are dealing with the differentiated products. Question number 8. Economic indicator of contraction and expansionary phase by measuring real GDP is. So, which of these economic indicators are measured by fluctuations in the real GDP? That's what they are asking. We can explain this with the help of this notes. See, please understand, in the business cycle, real GDP is taken on the y-axis. The fluctuations in the levels of the real GDP is actually used as a criteria to measure the different phases of the business cycle. So obviously I can take the option A. Ninth one. National income accounts can avoid multiple counting. So the challenges in national income accounting is multiple counting, counting the same quantum of production again and again. So this can be solved by which of these following measures? Obviously, if you count the final products, then this problem can be solved. When you count the intermediate goods, then only this problem we will come across. 10th one. What does Article 246 of the Indian Constitution deal with? So please understand, Article 246 of the Constitution deals with division of power, decentralization. So division of the legislative powers between the state and the central government. So please know that Indian government is a federal form of government. We have state governments at the state level, and also we have central government at the central level. So uh, who has power to legislate a particular law? Then we have to go and see the article 246 that has clearly listed the powers distribution among the central and state governments. So they have to formulate the law accordingly.